Ladies and gentlemen, good day and welcome to the India Cements Q4 FY23 and FY23 call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Aman. Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q4 and FY23 call of the India Cements Limited. On the call, we have with us the entire senior management team of the India Cements. I would like to mention on behalf of the India Cements Limited and its management that certain statements that we made or discussed on this conference call may be forward-looking statements related to future developments and the current performance. These statements are subject to a number of risks, uncertainties, and other important factors that may cause actual development and results to differ materially from the statements made. The India Cements Limited and the management of the company assumes no obligation to publicly alter or update these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to Mr. N. Srinivasan, Vice Chairman and Managing Director of the company, for his opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, sir.
Thank you, Vaibhav. Gentlemen, the results, if one can say, are startling. When the cost of coal, which is our main fuel, skyrockets from about $60 to $300, there is very little that management can do except grin and bear it. In our case, for almost 7, 8 months, 9 months, the cost of coal was astronomically high, and it has now shown some signs of coming down. To give you an example, the cost, we in cement industry look at coal as cost per calorie of heat that goes into the kiln. So what was 1 rupee per calorie went up to 2.8 rupees per calorie. So this kind of an increase cannot be borne by any management. So you have to accept the loss and try to mitigate it in several ways, including working at the consumption. Looking at the consumption, no real research has been done into the heat of reaction where the limestone converts itself into clinker. So therefore, any improvements that have been made have been done by the machinery manufacturers who have reduced the heat consumption by trying to see less heat goes away, that all the heat is generated, is used, etc., etc. So therefore, in a sense, when the cost of coal goes up, the cost of heat goes up, there is very little that we can do. As far as India Cement is concerned, there are still a few areas that we can work on. We want to work on in 2, 3 of our plants on changing some equipment, and so we have a capex program which will reduce the heat consumption by changing equipment which are known to consume less heat. We have engaged experts from FLSmith as well as Crook Malaysia to advise us, and their report is almost ready, and we are in a position to implement some of these changes. You can ask, you are making such losses, how are you going to finance it? Well, what we have done is we have identified some land which is not used for cement, which will not be used by cement factor, which is away, and that land can be disposed of, and I think that will be sufficient for our purpose of not only repairing our plants, fitting in new equipment, and even if necessary, if we need money for repayment, this will be handy also. So we have to repay about 580 crores this year. We will be complete. We will be compliant. We will repay the full for 580 crores plus interest. So there will be no default from our side. These are the preliminary remarks that I have. I would be happy to respond to any question that you have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1 at this time. First question is from Naveen Sahadeo from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir, and thank you for the opportunity. And before I begin with the questions, first let me congratulate you for CSK now, going to the finals.
Thank you. You're all grinning. You're all smiling here.
Yeah, of course. It's always a very nice moment to know CSK. I mean, it's my personal favorite, so certainly look forward for yet another win. And just before we begin the questions, can I just request to share volumes and other data of those windmill shipping, which helps us understand these results better? I'll come back in queue for questions. Thanks.
Yeah, volume for the quarter was 27.85 lakh tons, including clinker of 0.110.
27.83.
85 lakh tons. Okay.
85. Okay.
Yeah.
Okay. And those other revenues and EBITDA, if you can share from the other business segments.
Shipping was around 13 crores revenue and 5.6 crores EBITDA.
Okay.
Windmill was around only 0.73 and practically nil EBITDA. RSP was 25 crores income and EBITDA of close to 1.8 crores.
Understood. Fair point. Okay. So then my first question is about prices. Of course, you have seen, I think, prices have been under pressure this quarter as well. But is it fair to say that current prices, because especially I believe the states like Tamil Nadu and Kerala, where all A category players particularly, I think, have been very aggressive, especially in the last couple of months. So is it fair to say that in these markets particularly, the prices, current prices could be at least 5-7% lower versus March quarter? And in general, your commentary on the price and the outlook, that will help. Thank you so much.
You see, as far as price is concerned, everybody, I think generally the cement industry recognizes that this price at which we are selling cement is not to deliver good results. But at the same time, everybody, must understand the price from the point of view of demand. This year, the demand is good. In fact, almost all the companies are running full. So the tendency amongst most companies is to sell the last gram of cement, which is not good for price. What happens is when everybody rushes to sell, price is the casualty. So that is the reason why, in spite of people wanting to have a better price, it is not there in the marketplace. The marketplace is cutthroat in spite of the fact that we are at full production. This is strange. At full production, the prices should go up, but instead they're stagnant. So to answer your question on pricing, at the moment, although there is almost full production, prices have not gone up. But my expectation is it will. It's only a matter of time before it goes up.
I mean, to answer one more question of yours, the prices as compared to March have not slipped. It is at the same level or better than March, but then it is at a very low level.
Sure. So if you could just, this question was in for Tamil Nadu and Kerala states because...
I'm talking about Tamil Nadu, Kerala specifically, that prices as compared to exit price of March are better.
They are better. Okay, understood. That's helpful. Thank you. Thank you so much, sir.
Thank you. Anyone who has a question may press star and 1. Next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Good afternoon. Am I audible?
Yes.
Yes, very much.
Yeah. So could you share the annual numbers, clinker production and cement production and sales volume for the full year, please? No, full year FY23.
73 lakh tons of clinker.
Okay.
97.3 lakh tons of cement.
This is production 97.3.
Yeah.
And cement and clinker sales?
98.93.
Okay. This includes clinker or that is separate?
Clinker is included in that.
Okay.
1.37 included in sales, overall sales.
Okay. Sir, earlier we were looking at the south market, the price difference to, minimize and go away. What is the scenario currently on that?
I couldn't get your question. What?
I didn't get you.
The price difference, whereby people were invoicing and then later on discounting, and this was creating a lot of, prices were volatile. Has the situation, is it improving in southern markets?
So the price difference concept still continues. So there's no change in the way the people are marketing things.
Okay.
It is, to explain, if companies are firm, this question of price difference will not arise.
Mm-hmm. Okay.
The weakness of the selling force that this price difference comes up.
Okay. And you mentioned that March exit prices have slightly improved, but how is the situation compared to March quarter? Because if I look at your realization for March quarter, it is down almost 5% quarter on quarter. So the current prices versus average of March, how would that number be?
Slightly better understanding, but this quarter is still not over. If you're comparing quarter, you have to look for...
Correct.
As of now, it's better. If you take half of the quarter, it is better than March. Slightly better, not very good.
And how has been the fuel cost consumption basis in March quarter? It was around 2.95 rupees for December quarter.
2.7 it was in March quarter.
2.7. And for the Q1, what is the number you are looking at, sir?
Maybe around 2.3 to 2.4, sir.
Okay. So you are looking at some good savings which may improve the numbers. Is that understanding right?
The cost will come down. Cost will definitely come down.
Okay. But could that reflect into margins, or do you expect that it may get passed on in terms of to deliver volumes?
You have taken everything from us. You have said the prices are slightly better than, when I say prices, net what we get in the company are slightly better than the last quarter, and price cost is slightly lower on the variable cost basis. I'm talking about variable cost level.
Right.
And half the cost is over, so we have a long way to go.
Sure, that's okay. You mentioned earlier in the call that you're looking to monetize some of the land parcels, which will give you some leeway to do some refurbishment capex. Could you quantify what sort of land monetization you're looking at and what sort of capex number you're looking for FY24?
See, we are expecting to monetize about 400-500 acres of land. We are expecting that we shall sell it for 1,200, 1,300 crores.
Mm-hmm.
We are in the process of finalizing what capex that we want to do, because there are options. We want to see what will give us the best fit. So we are in the process. All I can say is that it will be towards grinding, because in some of our plants we have got roller mills. They have changed to vertical roller mills. The drop in power is enormous, and also some changes in the pyro processing.
Mm-hmm.
I'm afraid I'm unable to give you details.
Sure, sir. I'll come back in queue. Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good afternoon. Just a couple of questions on the capacity side. We've seen some announcements happening on expansions now in South, we were not seeing that earlier. So, anyway, Shree Cement is coming up with a plant, and even Ultratech is working on the same, and are doing some debottlenecking. So, this high competitive intensity that you mentioned earlier, could this now continue with these new units coming up?
I think very, very little new units are coming up. If you take the entire South, the South as a whole has a capacity of almost 90 million tons. 180. So 180
million tons.
180 million tons. In this, if 2-3 million tons of bottlenecking and addition come, it's not going to make much of a difference.
No, I understand that, but companies themselves are not expanding, and now they are, which means that they are seeing higher utilization in their own capacities, existing capacity. So, which means, does it mean that they will continue to be aggressive in the market and raise utilization levels for their existing capacity before the new one starts?
Actually, that is true, that the capacity utilization of most companies has improved in last 1 year because of infra demand coming back to South, which was not there earlier. So there are headrooms, so people would like to add on capacity, but it's not easy. People who have started the work will take another 1.5 years, 2 years to do it. And in a demand of 150 million tons, including what goes outside, I think as MD said, 3-4 million, 5 million, even 10 million tons coming will get absorbed. So one has to wait and see. People have to also make money, so they'll. I don't think it'll impact the prices. That's what I think. Anyway, the prices are at the lowest level. It has to only go up.
Okay, sure. And also on the limestone auctions, could you just throw some light on what's the update on the Tamil Nadu auction?
Nothing is happening. It's on standstill right now.
Oh, okay.
No auction has happened in the South anyway so far.
No, even I think going further, most of the limestone bearing lands are being spoken for, and most of the limestone has been also used. It's not like that there are the vast tracts of limestone unexploited which is available, which will add to capacity. People can get by with the existing limestone that they have. I don't think it will support great expansion in the future.
Okay, got it. Sure. Thank you.
Thank you. Anyone who has a question may press star and 1. Next question, follow up from Naveen Sahadev from ICICI Securities. Please go ahead.
Yes, thank you for the repeat opportunity. I had 2 questions. One is that our volume for this full year, as you said, are more like 9.7 millions in the quarter, which is still, look at from a peer perspective or industry perspective, way below what we did already in FY19. So as a broader industry level, our understanding is that in FY23, the industry has surpassed the volumes that it had, South industry specifically, has surpassed volumes that it did in FY19 because you had 2 bad years, 20 and 21, all thanks to COVID in the interim. But there has been recovery thereafter. So just wanted to get a sense that with other players or other peers growing or like 30 to 40% kind of a growth that we are seeing, but ours is not that much. Do you still think that having lost some market share, the pricing overall will still improve, or you think that this year again, companies in general may want to get the lost market share to the large companies?
Actually, if you look at the scenario for the South, I'm talking of the South. It is a fact that at the moment there is no surplus clinker available. A few companies are trying to debottleneck. A couple of companies are trying to set up grinding units. One company set up an integrated plant in Kurnool, but the question of what will the price be, that I will wait to see. With this kind of full production, price has to go up, but it's a matter of time.
Naveen, just to add to what MD said, that what we have done, when you make, we know that there's no secret that we are making laws. We have made laws, so we have to pick and choose markets. What we have done in this year, I wish I could give the data to you, but we have tried selling more into our core markets. So while the number 9-point-something million looks a little low as compared to what we have done in 2019, but actually if you look at our share in core markets, we have increased exponentially. So that is where we are working on. And as we go along, our plan is to go to that number which you are looking at. It's because your capacity, we are not adding capacity. But we'll run full capacity, that much we know. So it is not, and as MD said, that we have already seen the industry working in full capacity with growth still of double digit in South. I think it will be very easy without disturbing the price to get that volume. This is the plan of scheme of things. So we have done the phase 1 of increasing our sale in the right segment, in the right market. Now next is to get the delta increase and go to the full level. This is the plan for this year.
Great. So safe to assume that despite large players going or pushing volumes far aggressively, it is fair to assume that prices can, overall industry pricing environment can improve in this fiscal. Is that the message we can take? Or
Exactly. Because I don't think if you look at all the big players, I don't want to name them, but all are running to the brim, who make a difference in the market for as far as price is concerned. And whether it's Tamil Nadu, whether it's Kerala, so everybody seems to be settled there. The question is whether they will increase the price. We have to wait and watch. That's what we are saying. But theoretically, if you look at it, if people are operating at 85% plus, normally prices go up.
Got it. Thank you. My second question was about the capex that we can expect at the company level for 24 and 25 in light of the initiatives like changing of some critical equipment to improve the efficiencies. So in general, what is the capex for FY24 and 25 are we looking at, and by when do you expect these, especially the large equipment or critical equipment, to get replaced? Thank you.
The capex estimate can be about 600 crores. It should be completed in about 18 to 20 months.
I mean, as you said, we are waiting for the report to come, and what MD said is we are targeting 3-4 factories. So given that number will be around the number which MD mentioned, and the span of expansions, the capex will be based on how the project report comes. So it will be around 2 years. You can take it in 2 years' time. We'll have to spend this money.
Understood. That's helpful. Thank you. Thank you so much.
Thank you. Anyone who has a question may press star and 1. A reminder, anyone who has a question may press star and 1 at this time. The next question is from Shyam Sundar Sriram from Franklin Templeton. Please go ahead.
Hi, sir. Good afternoon. Thanks for taking my question. Sir, my question is more at the industry level, trying to understand the dynamics within states in the south. We are given to understand that the grey cement pricing in Hyderabad is now, say, very close to the pricing in Chennai. Historically, the Tamil Nadu pricing used to be at a premium to that. Now, given that, has it stopped some of the players from that cluster selling cement into Tamil Nadu, Chennai, and does it mean that the players with plants, production within Tamil Nadu get to gain market share here in this state?
See, fortunately, we are into all clusters, so we cannot say that Tamil Nadu is not our cluster and Andhra is not our cluster. So but what you say is what possibly is happening, that Tamil Nadu players are focusing more into Tamil Nadu, Kerala, and the cluster of Andhra, Telangana are focusing more into Andhra, Telangana. Fortunately, there is demand in every state, so people are able to evacuate their cement in the lower freight zone, and that is logical. So as we have been saying, is most of the companies are already operating at the optimum level, be it in Tamil Nadu, be it in Nalgonda cluster, or be it in Tandur cluster. So it's just that we have found a new model of coexistence. The prices are low, but as I said, that if people are operating at close to full capacity, is all the more. We do believe that the prices automatically will go up. We have to see how long it will take. But looks like that stability will come and the prices will move up. This is our feeling. But what you say is more like right. Chennai prices are not very attractive as it used to be.
Understood, sir. Thank you for this. So one other point. Now, Karnataka recently went to an election, and we are given to understand that probably some of the infra contracts are being reviewed. Now, in the south, I think Telangana is also coming up for election later this calendar year. Now, given these, do we still continue to think that South demand will continue to be healthy, robust for this F24?
Yeah, I'll tell you, let us try to understand from where the demand is coming. Additional demand. The demand was always there. Additional demand is coming primarily from one is the road project, which is driven by center normally, and some states also have their own projects. Number 2 is from metro and infra projects like that. Number 3, it is for real estate from place like Hyderabad, which is driven primarily because of the economic factor. It is a private players who are doing the whole thing. There is no more Kaleshwaram and other things. So these are the demands which will not go away, because Hyderabad has become a bubbling setting which is bubbling with activity. Andhra has pockets of activities happening, mostly driven by government, but also road projects of central government. Same way, Tamil Nadu, Kerala first time is seeing so many roads being made. So I don't see, especially with 24 election coming in, I'm not looking at so people. I mean, some of these activities will only go up; it will not come down. So personally, if you ask me, the demand up to 24 can be taken for granted. The growth and demand can be taken for granted. I mean, some here, there, some state government projects can get delayed or whatever. But what is being driven is that Chennai Bangalore road. Now that will not stop because of this election or no election. So this is up to 24. We can keep seeing this activity going on. And not many metro projects are also coming up. You are aware of that.
Understood.
So our feeling is that till 24, there is no looking back. This is our feeling.
Wonderful, sir. Glad to hear. Best wishes, sir. Thank you.
Thank you. Anyone who has a question may press star and 1. Next question is from Mangesh Barang from Centrum Broking. Please go ahead.
Afternoon, sir. Sir, the question is on the utilization levels.
Mangesh, your voice is breaking. Please come in a network area. Use a handset, please.
Okay.
No, the voice is still breaking, Mangesh. Can you use the handset?
Hello.
Voice is breaking.
Sir?
Mangesh, your voice is still breaking, sir. Can I?
I'll just come back in network. I'll come
now
back.
It is fine. Yeah, now it is fine.
Is it fine? No.
Yes.
Sir, so you mentioned that southern utilization is that clinker utilization is very close to full, and the overall cement capacity is 180 million tons. Just wanted to know what is the cement utilization or cement production in the southern region in FY23?
See, we don't get this data anyway, so it's all guesstimate. But we believe it is around 140, 150 million tons. Given that a lot of movement is happening outside south, there's a lot of quantities going into Maharashtra and western side, and this side on the Odisha and western side. So this is our guesstimate. I can't give you a number because we don't have any data from any source.
Okay, great. Sir, second question is related to you mentioned that you would be trying to address the specific heat consumption issues, those costs being higher. So just wanted to know what are the steps that you mentioned that you are taking. What is the scope of capex there, and how much cost saving you expect from this?
See, what we are looking at is the whole pyro processing system. It depends upon maximum heat to be utilized in the process, in the system. Right. So therefore, the radiation losses, other losses should be cut to the bone. Not only that, now all plants have started using waste heat recovery. That is, the waste heat that goes out is trapped and they used to generate power. So therefore, we are seeing a much more energy efficient cement industry than before.
Right. So we are looking to set up WHRS, is it?
We have already initiated one plant of a WHRS project. We are also looking at projects which already investments have been made to put in AFRs in all the kilns. And somewhere we are also looking at, and other projects that I told you will be taken up after we have the project report in hand from the experts. So, but all of them will be towards efficiency improvement, either on the pyro side or on the grinding side. It can be a VRM. And obviously the most important thing which we have already initiated is we are going to put out mega plant of solar power plant of not mega, a big plant of solar power in Tamil Nadu. So that also will help us in power. So these are the initiatives we have already taken.
Understood, sir. So, is on the pricing in South. So, historically, as the previous participants also mentioned, that we have seen the South prices have historically been higher. But is it because that we have seen higher demand for the past 2 years that the pricing has taken a backseat? And once this very high demand growth phase is over, probably the pricing growth again can come back to these markets?
See, on pricing, very difficult to say when there are so many people on the face. But as I believe that when the utilization goes up, normally the prices become steady and improve. As of now, are we seeing it today? No, we are not seeing it. The marginal improvements have happened, as I mentioned earlier.
It used to be reversed. So even though despite lower utilization, we used to have relatively good pricing. But now that the utilization, so it's basically the reverse has happened. So just wanted to check if the demand actually stops, whether the intensity of the players to push more volumes in the market would stop and thereby help pricing.
Exactly. So once you have reached their optimal capacity, then that urge to sell the extra ton will go away. Far away from it. So we still, as we said, as of now we have not reached anywhere near that. But once that realization comes that I can't even by reducing the price, I have to do the same volume, then people will start increasing the price. That's what happens everywhere. If you see other regions, whether it's north or whether west, once that capacity utilization reaches a particular level, look at Gujarat typically. With reasonable capacity utilization, prices are very steady and at a very high level. So we expect the same thing to happen in south. It will take a little time.
Okay. And sir, sorry, one more question, that we had sold our limestone mine in MP to JSW Group. So that money has been received, and or where has it been utilized?
The entire proceeds for 3 crores, about 600 crores was received, and it has been utilized partly for improving efficiencies in some of the plants, working capital requirements, and also for meeting the deficits in terms of cash flow.
Nothing pending there, right, sir? There?
About 3 crores is pending.
Okay, thank you.
Thank you.
That's it from me, sir.
Anyone who has a question may press star and 1. Next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Just on the previous questions, you mentioned that you would be doing a WHR project on AFR. So could you quantify what sort of WHR you're looking at, and the AFR and all total capex outlay for these?
Sir, we are actually looking at putting up a WHR plant of 8 megawatt at one of our plants. And the AFR all the locations.
See, we have the process of putting our feeding system. Once that is ready, we'll start using AFR to a higher level. I can't say anything right now, but our plan is to go up to into more than double digit.
At company level?
Yes, at company level. This is the plan.
Okay.
First, we are putting up the feeding system.
Sure. So how we understand is, like you said, that 600 crore odd you will be investing over the next 2 years to replace your ball mills across 3-4 plants, and then 8 megawatt WHR, that would be around 100 crores?
Yeah, approximately.
And AFR would be costing how much, sir, for you across plants that you are planning?
So it depends upon the plant size and all that. So depending upon the plant, it may vary from 3 crores, 5 crores, like that.
Okay, not major one. And you mentioned 580 crore is a repayment due in FY24. And in addition to the interest outgo, or this is inclusive of that?
So this is, interest is separate.
Interest is separate, okay. So almost 800 crore would be what you will be paying towards debt and interest?
No. Sir, it will be like this. We have a principal repayment of about 450 crores, plus some interest payment is also included in the 540 crores.
Okay, so for FY24, if I look at 450 crore plus, suppose the last year's interest.
Repayment.
Sorry?
450 crores will be the principal repayment.
Right. And annual interest cost 200 to 250 crores?
Yes.
Okay. Okay, sir. That's all from my end. Thank you. All the best.
Thank you. Anyone who has a question may press star and 1. Next question is from Naveen Sadeh from ICICI Securities. Please go ahead.
Thank you, sir. Just one last question from me.
what is the current net debt, both at the standalone and the Concall level as at the end of FY23? Thanks.
Standalone debt as at March 23 is 2,919 crores, including working capital.
And for Concall?
1 minute, just give me a minute.
2939. 2939. 2939.
Understood. This is after adjusting for the money that we have received from the sale of Spring Bay wine and everything. This is helpful. Thank you. Thank you so much.
Thank you. Anyone who has a question may press star and 1. A reminder, anyone who has a question may press star and 1 at this time. Anyone who has a question may press star and 1. Please note that this is a final reminder for questions and no further reminders should be placed after this. Ladies and gentlemen, that would be our last question. I now hand the conference back to Mr. Vaibhav Agarwal for closing comments.
Yeah, thank you. Sir, I had a few questions actually. So, sir, you mentioned about this WHRS project being implemented in one of your plants. So, sir, incrementally, our plants being, many of the plants having quite a lot of vintage. So, what is your expectation, sir, about of the total capacity? How many plants could potentially be supporting this WHRS projects in the future? Just your thought on that, initial thought. Maybe we can await the report, but what is your thought, sir, and what kind of savings we can expect from there?
The issue is vintage of the plant. A 4-stage preheater lends itself to a WHRS. So also we have different types of power. We have power which is wind power. We have thermal power. So depending upon the shortage of power, the need, we will take a call.
Right, sir. Sir, my second question was that you have provided for an extraordinary of nearly 113 crores in the current quarter, which is a write-off for Andhra Pradesh gas this company write-off. So, sir, can you throw some more light on this write-off and what kind of power was this company helping us? And is this also one of the reasons why our cost increase in power and fuel is reasonably higher than many of the other peers in the industry?
I will give the exact number there, but basically it was we had a share in APGPCL which was producing power from the gas. 23 megawatts of power. We used to get 23 megawatt of power which was used in our, and it was obviously at a much lower price than the grid power. Now, because the gas prices went up and it touched some $10 per gallon, and gas is not as it was, and they said the location also is not there, and therefore this whole organization, that is APGPCL, has gone into sort of is not working now. So it has gone to a closure thing, sort of a thing, and there are. So that is why we have provided for it, as if you know that we don't have any share there.
In any case, APGPCL did not get the gas allocation, so they were not able to run their turbines. That's one. Point number 2 is the price at which the gas is being supplied today. It is about $6.04, I think. So at that, even at that rate, the power from APGPCL will be more expensive than the electricity board power. So therefore, they had to go into a closure.
Right, sir. So this is sort of a permanent write-off for us as of now. And the second thing,
we have provided for an impairment. It's not written off. We have provided for an impairment in the value.
It will just read them. If the plant machinery is perfect with power condition, the only question is suppose tomorrow they reduce the power, gas power to 3 rupees or 2 rupees 50 paisa, old prices, then it will work. But so therefore we can't wait for that, so we have made a provision for that.
At this point in time, it is not economically viable, therefore.
Any other specific one-offs, sir, in the current quarter, apart from this, or anything else which is a one-off item in the at operating level?
No, sir.
There is no other specific one apart from this, right, sir? And sir, my one more last question would be, sir, that you have been on the whole call that our commentary on pricing has been not very confident in the near term of price increases, and observing the numbers of almost all of the cement companies, actually we have closed the year with a negative EBITDA of nearly 175 rupees a ton, and most of the other companies are doing reasonably okay EBITDA, maybe ahead of 500-600 rupees also in many of in your region as well. So, sir, what will be your take as to why the pricing would come back, and what can we expect as I'm not asking for specific guidance, but FY24-25 from a negative 170 trajectory, where can we probably target ourselves with the power savings coming in? Can we go back to that 500-600 levels of EBITDA per ton, or you think so that we'll still be closing at break-even levels for FY24, FY20? Your initial thoughts on numbers going forward.
The initial thought is that during the next year, the financial year, the situation will be much better. When we are operating at close to full capacity, prices will go up. That is the axiom that all of us follow. So a small increase will mean a lot to us. So therefore, we are expecting prices to go up. The Competition Commission, you can refer to for other details.
Right, sir. Right, sir. Yes, sir.
The EBITDA depends on two things. One is the cost of production, which went up by, that was 79 rupees per ton. It went up for us for simple reason because the fuel cost was high, and we could not run our power plants because the cost of coal was so high. Now these two things are changing now. That's why you are aware of the thing now. Cost of coal is coming down almost on a daily basis, so we should see saving there. The prices will take some time before it goes up, but definitely there should be an improvement. Given that nobody wants to lose money in the system, lying on the table. So that is what we will not increase. So we hope that the saving on the cost side will bring our, and that's why we are very confident that our EBITDAs will be now go back to the levels, not maybe 500, but definitely 8%.
Right. And so one question, if I'm asked to Srinivasan sir, basically we keep on getting a lot of questions from investors with regards to what is a roadmap for industry consolidation forward. So, sir, do you think so that the industry is now fairly consolidated and the industry growth from here on, companies growth would be more from organic route, and inorganic consolidation will be having lesser chances in going forward? Or do you think so that there are still players in the industry who are willing to take an exit? You being a stalwart of the industry, what is your take on this as per your industry interaction?
I think it will be more organic future.
Right, sir. So, right, so that answers it. So we have one more question from Mr. Rajesh Ravi from HDFC Securities. Is waiting in the queue. I think we'll just in the queue. I'll ask the moderator to take that question. Aman, can you take that question, please?
Thank you. Next question is from Rajesh Ravi from HDFC Securities. Please go ahead.
Thank you, Vaibhavji. Sir, just one clarification. This land monetization which you are looking at, would that be on standalone books or in the consolidated entity?
It will be on standalone books.
Okay, sir. And you have a fair, reasonable chance of monetizing them over next 12 to 18 months?
Yes. Very good chance.
Great, sir. That's all from my end. Thank you. All the best.
Thank you. Ladies and gentlemen, that would be our last question. I now hand the conference back to Mr. Vaibhav Agarwal for closing comments. Thank you.
Yeah. Thank you on behalf of Phillip Capital India Private Limited. We'll thank the management of India Cements for the call, and many thanks for joining the call. Thank you very much, sir. Aman, you may conclude the call. Thank you.
Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.